Remember that the following content is just a summary of information available on the internet, generated by AI. Investing decisions carry risks. Uranium fever. Is Denison Mines a golden opportunity or a tariff trap? Denison Mines. What does the company do? Denison Mines is a Canadian company engaged in uranium exploration and mining. It owns mining projects in the Athabasca Basin, one of the richest uranium deposits in the world. Despite growing demand for clean energy and rising uranium prices, Denison is still developing its resources and has not yet reached full production capacity. Financial fundamentals. How healthy is the company? Revenue and EBIT. Expected revenue for 2025, around 5 million Canadian dollars. Projected EBIT loss for 2025, around 70 million Canadian dollars. The company is not generating profits, but forecasts indicate a reduction in losses by 2026. Does Denison have enough cash to survive? Denison has not been profitable for years, and its survival depends on available financial resources. The key question is how long it can operate without additional funding. There is no precise cash balance available, but based on spending trends, the company may need to raise capital through share issuance or debt financing. Technical analysis and trends. Current stock price, $1.82. Support level, $1.80. Resistance level, $1.91. Average investor purchase price, $2.04. Capital is flowing out. Over the past 5 days, there have been significant capital outflows, indicating increased selling pressure. Major outflows occurred on January 24, 27, and 30, suggesting that investors may be taking profits or anticipating further declines. Is a short squeeze possible? There are no signs of increased short selling, meaning that there is currently no indication of a sudden price surge due to short covering. Analyst valuations. What do the experts say? Average price target, $3.67. Lowest forecast, $2.75. Highest forecast, $6. Analyst recommendations. 3 by ratings. Global factors, trade war and competition. Uranium prices and market conditions. Uranium prices are around $85 per pound, the highest level in over a decade. Major competitors such as Cameco and Kazatomprom plan to increase production in 2025, which could lead to higher supply and potential downward pressure on uranium prices. Mining costs are rising, but Denison is not yet a fully operational mining company, meaning its future depends on production expansion and potential strategic partnerships. U.S., Canada, China, Mexico trade war. What does it mean for Denison? Recent tariffs include 25% on Canadian goods, 10% on energy resources. Negative impact on Denison Mines. Exporting uranium to the U.S. will become more expensive, potentially reducing demand for Canadian uranium. Operational costs for Canadian energy companies may rise due to tariffs. U.S. nuclear companies may seek cheaper uranium sources, such as Kazakhstan or Australia. Potential benefits. If the U.S. decides to increase domestic uranium production, global prices may rise, ultimately benefiting Denison. In the long run, the trade war could lead to greater Canadian government support for domestic uranium producers, improving Denison's financing options. Is this the right time to buy Denison Mines? Arguments for buying. Uranium prices are historically high and could rise further if the U.S. limits imports from Kazakhstan and Russia. The long-term outlook for nuclear energy is positive, with increasing demand for stable energy sources supporting uranium-related companies. If analyst predictions come true, the stock could gain over 100% from current levels. Denison owns some of the best uranium deposits in the world. Arguments against buying. The company is not yet profitable and may need to raise more capital through share dilution. Tariffs could hurt profitability for uranium exports to the U.S. Investors have been selling shares heavily in recent days, suggesting potential further declines. strong competition from Cameco and Kazatomprom, which could dominate the market. Conclusion: Denison Mines has significant growth potential, but also high risk. Uranium prices are strong, but the trade war could impact export profitability to the U.S. Investors looking for an exciting but speculative opportunity may find Denison appealing. However, those preferring stability should consider larger companies like Cameco. Is Denison Mines the future of uranium or just another speculative bubble? The choice is yours. We invite you to subscribe to our channel for easier access to future analyses. Please like the video to help us understand your needs better. If you want us to prepare a similar short report on another company, write its name in the comments. We do not engage in brokerage activities consisting of investment advice, portfolio management including one or more financial instruments, or preparing recommendations regarding transactions in financial instruments, or any other brokerage activities specified in the Act on Trading in Financial Instruments. Journal of Laws, 2005, number 183, item 1538. In accordance with Regulation EU, number 596/2014 of the European Parliament and of the Council of April 16, 2014, on market abuse, and the Commission Delegated Regulation, EU, 2016/958 of March 9, 2016, supplementing Regulation EU. Number 596/2014 of the European Parliament and of the Council with regard to regulatory technical standards for the technical means for objective presentation of investment recommendations or other information recommending or suggesting an investment strategy and disclosure of particular interests or indications of conflicts of interest. The information provided in this recording is a compilation developed based on data and content collected from various internet sources, which are not always fully verified by us. They are for educational purposes and as part of an experiment on AI capabilities. When making investment decisions, the user should rely on their own judgment. Transactions conducted by the user are considered their own independent decisions.